Comet is a story of constant evolution. Over 75 years of adapting to and driving some of the biggest technological and with this also societal shifts in modern history. Comet's history began in 1948 with a focus on solving challenges in X-ray technology, more specifically medical X-ray, a commitment to innovation and serving society that has shaped us ever since. In the 60s, we expanded from X-ray vacuum tube expertise into vacuum capacitors, entering high-frequency markets like broadcasting and telecom. The 70s marked our move into industrial X-ray components, establishing Comet as a key player in non-destructive testing. In the following decades, our technology supported major breakthroughs from the first CT scan to space missions, while we refocused on advanced industrial applications. The acquisition of Exelon in the 2000s, today's division IXS, we transformed ourselves from a component supplier into a full X-ray systems provider. And now, in the era of AI and automation, additions like Canadian software company ORS, the development of the Synertia and our CA20 system platforms are enabling smarter, software-driven manufacturing and inspection for next-generation semiconductor and electronics devices. And that's really been Comet's story. More than 75 years of adapting to change, staying ahead of and driving every major technological wave. From the first X-ray tubes in the 40s to today's AI-powered inspection and plasma control systems, we've continuously evolved with the goal to innovate for sustainable progress of our societies, of humanity. Ladies and gentlemen, good morning. Welcome to our Capital Markets Day 25. We sincerely appreciate that you have taken the time to join us today and to listen in on our journey ahead. Over the next sessions, Uli has already introduced them, we would like to share with you why we are confident that we can continue and further build on the successful past I have just introduced. But before we look into the future of Comet, let's take a moment to see where we stand today. Comet's current ability to innovate for sustainable progress is powered by our truly global footprint with strong roots in Switzerland. Our headquarters near Bern remains the heart of the company. It's where our technology leadership began and where our core R&D still takes place. But over the years, Comet has grown into a global player. Today, we operate from 12 locations across 3 continents. With more than 1,800 employees worldwide. We have manufacturing, application engineering, and/or R&D sites not only in Switzerland, but also in Germany, the US, China, Malaysia, and South Korea. Close to our customers and to the innovation hubs that drive our markets forward. This global setup gives us both reach and resilience. It allows the ability to serve our customers where they are, adapt quickly to the local emerging trends, and ensure a stable, efficient supply chain. In 2024, our net sales reached around 445 million Swiss francs, with 62% of sales generated in Asia, about 20% in North America, and 16% in Europe. That reflects the strength of our position in the world's fastest growing high-tech markets, particularly in semiconductors and advanced electronics. So, with a strong global footprint and deep roots in Swiss precision, Comet is well positioned to serve the world's most demanding industries with a clear focus on the semiconductor ecosystem from chip design and fabrication to inspection and quality assurance. Our business is thereby built on 2 core technologies, high-frequency power on the one side for plasma processes and X-ray technology for non-destructive inspection and metrology. Together, these two technologies are among the enablers of the semiconductor world, making modern electronics faster, smaller, less power-hungry, and more reliable. Let's start with our largest business, plasma control technologies, or short PCT. PCT is number one globally in vacuum capacitors and matchboxes, critical components for precise plasma control in chip manufacturing. Our products enable our customers to achieve stable, repeatable, and highest plasma processing performance, the foundation of every advanced semiconductor process. In 24, PCT contributed 56% of Comet's total sales and continues to grow alongside the most advanced nodes in the industry. Next is our X-ray business, which is divided into the two divisions, X-ray systems, or in short IXS, and X-ray modules, in short IXM. IXM is the global leader in high-end X-ray sources, providing the precision and reliability needed for inspection in industries such as semiconductors, electronics, automotives, and aerospace. And with IXS, our X-ray systems business, we rank among the top 3 in industrial inspection systems globally, supporting customers from R&D to full-scale production. Together, these two X-ray segments contributed roughly 44% of group sales in 2024. So across all our technologies, we play a vital role in the industries we serve, especially the semiconductor industry. We're enabling our customers to push the limits of what's possible. At the same time, we are ensuring quality and efficiency, the pursuit of highest possible yield in shortest time in every step of the process. Now, technology leadership is obviously very important, but it is also so that value creation is very important. By enabling, among other things, the future of computing and data storage, we're not only advancing technology, we're building a resilient, growing business. And the numbers tell the story. Over the past 25 years, our sales and EBITDA have risen to new levels through every cycle. And as we continue our journey and transformation, our focus will turn ever more on semiconductors, in line with our aspirations of technological leadership and in pursuit of higher profitability. As such, very clear, semiconductors are at the core of our strategy and a tremendous growth opportunity. So how do we plan to continue the long-term success story of Comet? As we just outlined, our technologies are integral to some of the most advanced industries in the world. The future is being shaped by semiconductors. We are not simply following the industry, but actively driving it forward. This is why our focus on this sector is increasing as we anticipate exceptional long-term growth opportunities. So where do we play in the semiconductor ecosystem? Now, Comet serves multiple parts of the semiconductor ecosystem. At the top, you see the major players in wafer equipment manufacturing, such as Lam Research, Applied Materials, or Tokyo Electron. They all depend on highest precision plasma control equipment to enable the manufacturing processes that build the chips that power modern life. This is where our PCT business actually excels. We are one of the preferred partners for RF power delivery. Technology for these equipment manufacturers, ensuring stable, repeatable plasma processes that are essential for every wafer produced. Then, as chips move through the production chain into packaging, testing, and quality control, our X-ray technologies come into play. Our X-ray modules from IXM and systems from IXS are used by leading foundries, IDMs, and OSATs to inspect complex packages and ensure defect-free processes and products. We work closely with all of these companies, helping them secure quality and reliability down to nanoscale precision. So whether it's enabling advanced plasma processes or ensuring the highest inspection standards, Comet is right at the heart of semiconductor manufacturing. So to summarize, Comet is deeply, deeply embedded in the semiconductor value chain, from front-end wafer processing to back-end inspection and testing. Our position gives us a front-row view of the industry and a very clear sense of where the next growth wave is emerging. And that is very crucial because the semiconductor market isn't just growing, it's transforming. AI, electrification, connectivity, and automation are driving unprecedented demand for advanced chips and the inspection solutions that make them reliable. So let's take a closer look at the manufacturing flow and where Comet delivers its progress-enabling solutions. From left to right, every chip obviously starts with a design and raw materials through a highly repetitive, a cyclical series of highly complex and repeated steps, such as lithography, deposition, etching, polishing, ion implantation. Layers of functional materials are added in a structured manner, patterned and refined to form billions of tiny transistors. Now, Comet plays a critical role at multiple stages in the front-end wafer fabrication through the hundreds to in excess of 1,000 steps in the cyclical front-end manufacturing process. To the right of the slide, and at the back-end assembly and testing process prior to holding a packaged and functioning chip in your hands. At the heart of these front-end processes is plasma. Our RF power delivery system, matching networks and vacuum capacitors, create and control the plasma with extreme precision. This ensures the accuracy, the repeatability, and yield that advanced chip production demands. In other words, without stable plasma control, you simply can't build today's nor the next generation of chips. Then, in the back end of the manufacturing process, where chips are diced, bonded, and packaged, our X-ray technologies take over. Our high-end X-ray and CT inspection systems are used to analyze connections, bumps, and detect defects in advanced semiconductor packages, a step that's becoming more critical as chip architectures grow increasingly complex. With our AI software-driven inspection solutions, we help customers guarantee reliability before chips even reach the market. So across both front-end and back-end manufacturing, Comet is essential, enabling precision, quality, and efficiency at nearly every stage of the process. That's what makes our technology not just important, but indispensable to the semiconductor industry's progress. So we've seen how Comet technologies are essential across multiple steps of chip manufacturing. Now let's step back and look at the bigger picture, the market dynamics shaping this industry and where the next opportunities for growth lie. So the semiconductor market is one of the most dynamic and strategically important industries in the world. The very bedrock of the world's electrification and our society's digitalization. It's driven by constant innovation, new applications, and structural demand that extends far beyond consumer electronics. We're seeing growing complexity in chip design, architecture, and manufacturing processes. Each new generation of chips pushes the limits of engineering physics, requiring greater precision and more sophisticated equipment. At the same time, miniaturization continues. We're now moving from traditional 2D and 2.5D chips to 3D architectures, stacking multiple layers to boost performance and also power efficiency. Very important, increasingly important. And finally, the industry is evolving from individual devices to fully integrated solutions, combining compute, memory, and sensing into compact, powerful systems. Each of these transitions is accelerating demand for advanced plasma control and inspection technologies, which are the core focus areas for us. But what is fueling this furious drive? Now, the mega trends creating this momentum are very clearly digitalization, electrification, and increasingly AI, which together are shaping the modern world. The first wave driven by Industry 4.0, cloud computing and the Internet of Things, connected machines, factories, and data streams. The second wave, which we're in today, is powered by AI, autonomous driving, and immersive technologies like augmented or virtual reality. These applications demand ever more powerful and energy-efficient chips. And ahead of us lies the third wave with 6G connectivity, quantum computing, and Industry 5.0, where humans and machines will work together in even more ever-intelligent automated systems. Each wave drives near exponential growth in chip demand, and with it, the need for precision manufacturing and increasingly inspection and metrology. With this growth in demand and market size, capacity expansion goes hand in hand. Now, between 24 and 2026, more than 70 new semiconductor fabs began or are expected to begin construction worldwide. Asia continues to dominate, but we're also seeing renewed investments in North America and Europe as countries seek to strengthen their local supply chains. For Comet, this global wave of fab expansion means the long-term demand for our RF power systems and X-ray inspection technologies. In other words, as the semiconductor industry scales up for the next era of growth, Comet is already inside the technologies and processes that make that progress possible. So with over 70 new fabs being built around the world and more to come until 2030, it is clear that semiconductor capacity will be expanding rapidly and thus demand for our products. But what is just as important as the scale is what kind of chips those fabs are making and what technologies are driving demand. Because as the applications become more advanced, the chips behind them require ever better products and partially entirely new technologies. So how is the market and application landscape we are focusing on shaped? As we look at the semiconductor landscape towards 2030, we're talking about a market of roughly $1 trillion. But what really matters isn't just the size, it's how that value is distributed. Most chips by volume will continue to serve consumer products, consumer markets such as smartphones or mobile devices, IoT devices, or automotive systems. These volumes are critical for sustaining fab utilization and driving scale efficiencies. Yet the real value creation is shifting. Nearly half of all revenue is expected to come from AI and high-performance computing applications. These segments demand the most advanced technologies and highest utilization of leading-edge fabs. Now, the AI chip market is expected to grow approximately 4 to 5 times from 24 to 2030, driven by large-scale infrastructure and also increasingly edge applications. While there are only estimates available what share of total industry growth AI chips will represent, the rapid expansions makes them a pivotal driver of value creation. So the large promises and opportunities of AI are driving semiconductor demand and reshaping the industry for years to come. AI applications and requirements on the associated semiconductor devices are the most significant driver of front-end and back-end innovation. From generative AI models and data centers to edge AI in smart devices, the performance demands are skyrocketing and requiring faster, smaller, and very, very important, more power-efficient chips. And that demand translates directly into needs for new manufacturing technologies. We are enabling the next generation of chip making with our leading-edge plasma control. Our new Synertia plasma control platform is designed to meet the precision and performance requirements of AI chip production. In short, AI is pushing the limits of what's possible today, and Comet's technologies are helping to make it possible. But what needs to be achieved? Now, when we talk about pushing the limits and innovation in semiconductors, it really comes down to one key objective: efficiency. The industry is working to deliver more compute power, more data stored per square millimeter of silicon, per watt of energy consumed, per data package transferred and stored. That efficiency comes from two technology trajectories. First, continued and efficient physical scaling of individual devices. Make it smaller. Shrinking transistors to ever smaller sizes and moving, for instance, to gate-all-around architectures. Chip makers can pack more logic on every wafer, thereby increasing density and performance. This transition, which begins with AI and high-performance computing applications, will later cascade into mobile and consumer markets. Or in other words, as I explained before, today's value chips will become volume chips over time. Second, from so-called heterogeneous integration. As physical scaling reaches its physical and also commercial limits, chip makers are combining and stacking multiple chips into so-called advanced packages. This boosts performance without relying solely on transistor shrinkage, as well as it boosts power efficiency. And that's where Comet's X-ray inspection solutions are becoming essential, ensuring reliability and precision in these complex 3D architectures and packages. So whether it's controlling plasma in the front-end processes or inspecting stacked dies in the back-end, Comet's technologies are vital to enabling this new level of efficiency. Now let me elaborate a little further. Let's first look at transistor scaling. Despite increasing headwinds to sustain Moore's scaling law, the pace of advancement from process node to the next remains at present unbroken, requiring accelerating speeds in technology development and also deployment, while still yielding decisive performance improvements. As an example, TSMC's plans for moving from the N2 to the A14 technology node in the next few years, with each new node improving performance decisively, while also, and that is very important, reducing power consumption. For Comet, this rapid pace means understanding the industry's roadmaps, and speed in bringing solutions to the market is of the essence. We're focusing our R&D and investment exactly where our customers are pushing the limits. This means addressing rising process complexity, enhancing control, and staying close to all the leading equipment makers. Now, the reward for this is clear: growth opportunities. Growth. As the semiconductor industry moves through these technology transitions, every new node, every new architecture, and every new application creates additional demand for advanced manufacturing tools, the very tools that incorporate our plasma control equipment. The wafer fab equipment spend is expected to grow from just over $100 billion today in 24-25 to nearly $170 billion by 2030, driven primarily by foundry and logic applications. That said, NAND wafer fab equipment is also set to expand in the coming years with a projected CAGR of 15% between 25 and 2030, growing even faster than the overall WFE market. AI continues to be the biggest accelerator driving the adoption of new process technologies like gate-all-around architectures and later CFET. At the same time, the industry is being shaped by structural forces from AI demand and advanced node investments to geopolitical developments and the global race for technological sovereignty. These are long-term growth drivers that create sustained opportunities for Comet. Now, what is driving this WFE growth? Demand for new technologies and new capacities. Let's briefly turn to one of the big forces driving demand, the explosive growth in memory fueled by AI, data centers, and increasingly also edge applications. What you see here is the outlook for both DRAM and NAND through 2030. And the trend is clear. Massive capacity expansion is anticipated, led for now by data centers. Starting on the left with DRAM, it is projected that the world will require almost 3 times more memory capacity by 2030, 86 exabytes in 2030 compared to 32 exabytes in 24. And while mobile and PCs continue to grow modestly for now, the real engine is, as mentioned before, data centers, which more than triple over that period. That's because AI workloads are very memory intensive. On the right, NAND shows a similar story, but at even bigger scale. The market is expected to grow from 868 exabytes to more than 2.2 zettabytes by 2030. I don't even know how that number looks like, to be honest, but I promise you, it's big. Again, data centers are the dominant driver, growing at 27% annually and accounting for almost half of all demand by the end of the decade. This is a structural shift. Memory is no longer just a PC or smartphone component. It has become core infrastructure for AI and hyperscale computing. Every new model, every new cloud service, every new GPU cluster increases the need for faster, more efficient, and more reliable memory. And this circles back to the previous slide, with memory demand also contributing substantially to WFE growth in the next few years. So to sum up, as AI accelerates the pace of semiconductor growth and innovation, Comet is right there at the inflection points, enabling faster, more efficient, and more reliable chip production through its leading product portfolio of RF power equipment for plasma control. We've just looked at how AI is accelerating front-end innovation, but the story doesn't stop here. AI is not only transforming how chips are made, it is also reshaping how they are assembled, integrated, packaged, and tested. In fact, AI is now the most significant driver for both front-end and back-end innovation. AI applications are pushing semiconductor technology to its limits. They demand more computing power, as mentioned, higher bandwidth, and lower latency while consuming less power. And that means innovation must happen across the entire manufacturing process, from the front end, wafer fabrication, where performance is sort of defined, to the back-end packaging and inspection, where reliability is ensured, but increasingly also power efficiency and thermal management of such chips. And that's exactly where we play a key role by enabling both ends of the process, with our leading-edge plasma on the front side and on the packaging side with X-ray technology. So what is an advanced package, or what is advanced packaging? Now, as traditional spatial scaling will eventually come to an end, packaging will increasingly lead the way by co-packaging individual semiconductor devices into one advanced package. Increases in speed and cuts in power losses can be achieved by, for instance, drastically reducing transmission lines. Thus, the industry is turning to heterogeneous integration, of which advanced packaging is a critical enabler to unlock another powerful lever for performance, power efficiency, and system innovation. In 2.5D and 3D packaging, multiple chips, CPUs, GPUs, memory, and specialized accelerators are very closely positioned side by side or stacked and interconnected to act as one high-performance system. This approach not only boosts compute performance, but also improves power efficiency and reliability, which is essential for AI and HPC applications. Today, advanced packaging is one of the most important innovation areas in semiconductors, and Comet's X-ray non-destructive inspection solutions are becoming indispensable in quality control, ensuring that these complex 3D architectures, 3D structures are perfectly bonded, aligned, and free from defects. And how is this market evolving? Now, the growth trajectory for advanced packaging is still sort of in its infancy, but advanced packaging is currently one of the fastest growing and most strategically critical areas of the semiconductor value chain. As mentioned, as device complexity increases, the ability to integrate multiple chips efficiently, as close as possible to each other, either side by side or on top of each other, becomes essential. The challenges of placing these chips closely, side by side, and or on top of each other, thereby drives demand for precise inspection and metrology solutions. The advanced packaging market overall is expected to grow at a solid 9.5% CAGR through 2030. But the segment most relevant for Comet, back-end metrology and inspection, is growing even faster at 11.3% per year, reaching about $850 million by the end of the decade. It is also important to note that this market is highly concentrated and geographically focused. Roughly 90% of revenues are generated thereby in Asia, and the top 6 suppliers control more than 80% of the market. This is why we continue to invest in people, especially in sales and service roles in the region, to support customers who rely on us for testing and qualification. In this industry, speed matters. Support needs to be on site within hours, not days or weeks. For us, this represents a strategic opportunity as our customers push the limits of chip packaging and stacking and interconnect density. They rely increasingly on advanced inspection capabilities to ensure yield and performance. Now, with the multiple growth opportunities in our divisions, how does our overall addressed market look like? Now, given my outline of the past minutes, unsurprisingly, we're in the right place at the right time, especially with our focus on the semiconductor value chain. So let's take a closer look at the size of the opportunity in front of us. What you see here is sort of a key takeaway for our investment case. Comet's addressable market is growing significantly faster than the overall market. On the left, you see the total addressable market growing from approximately $4.2 billion today to $7.1 billion by 2028, an increase of about 69%. But the more important chart is on the right, our serviceable addressable market. That means the part that we can realistically win given our current product portfolio and product platforms. That market more than doubles over the same period from $1.7 billion to $3.5 billion, representing 105% growth. The reason is simple. We are positioned in the fastest growing segments of the market, and we continue to extend our reach through forward integration and new revenue streams, particularly in semiconductor metrology and process control. But what does it take to capture these opportunities? Now, let me elaborate in what follows on some of the most important building blocks and priorities. Building blocks which enable us, building blocks that are required for us to capture these growth opportunities through focused and disciplined execution. Now, first and foremost, our journey forward is defined by our further increasing focus on semiconductors. In today's rapidly evolving tech landscape, the boundaries between front-end and back-end process are blurring, fueled by the increasing demand for higher performance, higher efficiency, and heterogeneous integration. This convergence has opened new opportunities for innovation and growth. One key aspect of this convergence is the emergence of advanced packaging. This trend is reshaping the semiconductor industry, and we see it as a significant opportunity for us to leverage our expertise and capabilities, especially on the X-ray side of our business. We are uniquely positioned to capture value from this convergence through our deep knowledge and experience in plasma control, X-ray, and process technologies. Now, these core competencies have allowed us to stay ahead of the curve and develop cutting-edge solutions that meet the evolving needs of the market. And furthermore, the transformation we are undergoing is being accelerated by geopolitics, which are reshaping the global semiconductor landscape. As the industry adapts to these changes, we see new avenues for growth and collaboration that will further propel our success. So how do we move from where we are today to a scalable, high-margin growth company? Now, our strategic approach is straightforward. Drive faster growth, operate more efficiently, and strengthen our culture. These are our strategic pillars. We are dedicated to leveraging our expertise and market-leading positions in plasma control and X-ray technologies for the semiconductor market to drive innovation and deliver exceptional value to our customers. As we look to the future, we see a world of many opportunities to expand our reach and impact. By focusing on accelerating growth, we aim to capitalize on emerging trends and market dynamics to drive revenue growth and profitability. Through strategic investments in current and new technologies, R&D, our footprint, partnerships, and market expansion, we are positioning ourselves as a market and technology leader poised for success in the years to come. In parallel, we are committed to enhancing efficiency across our operations, optimizing our processes, and leveraging digital technologies to streamline our internal workflows and drive operational excellence. By embracing a culture of continuous improvement and innovation, we are empowering our teams to work smarter, faster, more collaboratively, driving efficiency gains and cost savings that will fuel our growth and profitability. But perhaps most importantly, we are focused on strengthening our culture. A culture of excellence, integrity, and collaboration that defines who we are and how we operate, how we do things. By fostering a culture of trust, respect, and empowerment, we are building a strong foundation for success, attracting top talent, and driving employee engagement and satisfaction. So how does this transformation then translate into concrete actions for each division? Now, each division has a clear set of priorities and initiatives, but they are all built on the same company-wide foundation: a unified and common strategy and market focus, a common operating model, shared infrastructures, footprints, functions, process technologies, and vision. This ensures that while each business drives its own product roadmap, we move forward as one organization, one Comet, fully aligned in how we grow, how we execute, and how we create value. Our foundation is clear: a people-driven culture built on curiosity, integrity, passion, and excellence. Our core focus: semiconductors, driving quality, innovation, and technology leadership. And in this industry, success requires true customer obsession, knowing their roadmaps, adapting ours, and delivering solutions that essentially and eventually win. To achieve this, we cut complexity, move faster, and stay focused on what really matters across all divisions. These priorities and several more included in the slide unite us. To shed light on PCT's strategy, and Yuri will talk a little bit or a lot more about that later, the division aims to transition from a component supplier to a full RF power system provider, offering comprehensive solutions for the semiconductor and electronics industry. By focusing on plasma process control for advanced semiconductors, PCT is further establishing itself as a key player in this technology, scaling Asia-based manufacturing and R&D to serve global OEMs faster and more cost-effectively enhances the divisions and obviously Comet's competitiveness. In the IXS division, and Isabella will talk quite a lot about that later, we further specialize in high-end X-ray and CT inspection systems for advanced packaging and semiconductors. These technologies drive efficiency and reliability from early prototyping to manufacturing, offering a range of solutions and integration services close to the customers and markets. We cater to clients' needs from the lab to the fab with precision and expertise. In IXM, investments in dedicated semiconductor X-ray sources, software, analytics, and AI empower customers to make informed decisions and excel in a changing industry landscape. Strategic restructuring in traditional markets enhances profitability and agility, positioning us for success. Our focus on semiconductor technologies, graphic expansion in Asia, and digital transformation drive operational excellence and growth opportunities. Common to all divisions is that high-performing product portfolios addressing the key points industry are key to our growth. Now, how do we go about this? Now, the growth elements of our One Comet strategy are leverage, expand, and broaden. Leverage is anchored in what we do best: high-frequency power, X-ray, system design, and thus the continued advancement of our Synertia, CA20, and Dragonfly platforms. These core competencies have been instrumental in shaping our success and will continue to be the foundation upon which we build our future growth, where we spend also the majority of our R&D investment, leveraging our strong core competencies. Beyond the focus on our core competencies, we are actively expanding into complementary domains, very close to the core, in line with the rapidly evolving demands of our focus industry, exploring adjacent and complementary technologies and services that will allow us to offer superior process-centric solutions to our customers in the semiconductor ecosystem. Furthermore, we are strategically entering targeted markets to strengthen our position and broaden our relevance in the semiconductor value chain. By identifying and capitalizing on new growth opportunities, we are positioning ourselves for long-term success and sustainability in a rapidly evolving industry landscape. Our expansion into adjacent technologies and services will not only enhance our offering, but also solidify our presence and broaden our relevance as a key player in the semiconductor ecosystem. But having excellent products isn't enough. Permanent physical and scalable presence in the market regions of our customers is of equal importance. Comet's gateway to Asia, where our customers sit, and our customer base is for Comet Penang. Penang was once primarily an electronics assembly location and has evolved since the 70s into a fully integrated semiconductor ecosystem, from front-end design to advanced packaging, testing, and equipment manufacturing. Today, more than 50 global semiconductor leaders operate here. In short, Malaysia is becoming the new Silicon Valley, the Silicon Valley of the East, with Comet positioned at the heart of it. In Penang, we're investing where it actually matters most, in scalable, cost-competitive, and future-ready production capacity. Penang is a strategic milestone for us, our flagship expansion project, and a key pillar of Comet's global footprint and strategy. Construction of our own building is progressing fully on schedule and within budget. Once complete, it will double our current production capacity, giving us the flexibility and scale we need to support long-term growth. The new site in Penang is more than just an expansion. It is a strategic hub that strengthens our presence in Asia and enhances our ability to serve customers regionally. We are executing this in well-defined steps. After securing land in 2023, we're now moving toward full operations in the second half of 2026, so actually next year. During this transition, we'll gradually shift appropriate production activities, shared services, and back office functions to the new facility. These moves ensure business continuity while scaling efficiently. The building adds over 15,000 square meters of production space and follows a very clear roadmap toward becoming our Asian hub, the latest by 2027. This expansion brings multiple strategic benefits: long-term efficiency and scalability, a balanced and resilient global network, cost and scale advantages, and importantly, proximity to our regional customers. In short, Penang is how we are also securing future growth, besides investing into future product and service offerings. So while our investment in Penang strengthens our operational backbone and global capacity, innovation, and people, the third strategic pillar remain also at the heart of our long-term success. Now, at Comet, we believe that sustaining growth means more than scaling production and product platforms. It means developing technology and talent together. Our approach is simple but powerful. Technology improves our daily lives, and education improves technology. That's the cycle that keeps innovation moving forward. We're deeply engaged in programs that strengthen that cycle, from our apprenticeships and training programs to our collaborations with leading universities worldwide. We're also proud to be part of the European Chips Diversity Alliance, co-funded by the European Union, which promotes inclusion and skills development across the semiconductor industry. And our efforts are being recognized, for example, with the Semi Europe 20 Under 30 award in 24, and again also in 2025, celebrating the next generation of innovators at and within Comet. All these initiatives reinforce one message: our commitment to innovation today ensures we can sustain growth and leadership tomorrow. Just as we invest in people and innovation to build long-term resilience, we also take responsibility for how we grow. With that, we make sure that progress today does not come at the expense of tomorrow. For us, sustainability is not a side project, but part of how we innovate. Under the same guiding principle, innovating today, sustaining tomorrow, we're advancing both technology and environmental performance across our operations, silently, calmly. You can see this in our progress on carbon disclosure and transparency. In 2024, Comet achieved a CDP score improvement from C to B, moving ahead of the industry, actually, regional and global averages. This reflects stronger data quality, clearer targets, and tangible action plans for emission reduction. One of the key enablers is our expansion of renewable energy use. Across our sites, including the new facility in Penang, we are integrating solar electricity generation and green electricity sourcing, and we're on track to exceed 80% clean electricity by the end of 2025. These initiatives are not only about responsibility, they're about resilience. By reducing our environmental footprint, we also reduce cost exposure, increase energy independence, and strengthen Comet's long-term competitiveness. Now, this brings me to the end of my speech and the end of the introduction of the Comet Group.
Hello and welcome everyone also from my side. After Stefan, Andre, Isabella, Yuri have presented where we are going as a company, what's the progress we've made in our key new product and business initiatives, I'll take you through where this leads us in terms of sales and growth, as well as through what we'll do on the other side to improve our efficiency. First, let's have a look at what changed since 2023. Since 2023, a couple of things which have changed in the market and our environment have been discussed by the colleagues. It's the AI, speed, flexibility, these things which you need in the business today much more than 2 years ago. The other point which clearly changed is FX, regulatory, and the general global environment. And altogether, that also requires us to have some additional business priorities, and that means it's growth on the one hand, which is our key driver, but also looking much closer at efficiency and resilience, things we need to take and we are taking care about much more and focusing more on than we have done in the past. So taking all that together, where will it take us in 2028, in the next, what we think will be the next peak of the cycle? We've updated our midterm ambitions to reflect the change in exchange rate, as well as the expected timing of the peak of the cycle. We expect net sales in Swiss francs of 670 to 770 million francs, with an EBITDA margin of 22 to 27%, and the return on capital employed of 27 to 32%. What's the key drivers behind the change or non-change, whatever you call it? We have considered the devaluation of the US dollar, which hasn't only happened in the past, but it's a systematic step which is expected to happen, also expected for the financial markets, the future rates to happen over the next years. And it's something we should consider. That's as we are reporting in Swiss francs. If you were to look at us as a US dollar company, it's a very clear message. In the next peak of the cycle, we are a $1 billion company. And that's basically the same message we've sent 2 years ago. In dollars, there's no big change. There's a slight change in when it will happen, as the whole semi-cycle has shifted, as everybody knows. And when it comes to turnover, it is the same thing which we have shown here 2 years ago. In terms of EBITDA, we'll go a little bit into what's happening, but there is, of course, some impact, no matter in which currency you report and show it, if a large part of the cost base is in francs and euros as well, and the revenue is mostly in dollars, that has an impact. So altogether, that's our midterm ambition for the next peak of the cycle, 670 to 770 million Swiss francs, or in other words, around $1 billion in turnover and net sales, 22 to 27% of EBITDA margin. Let's get a little bit into how we are getting there and what's driving us to get there from today to a peak of cycle in possibly 2028. Andre, Yuri, Isabella, they've all clearly shown you have to plant the seeds early, and then it takes a number of years until you harvest. So where we've planted the seeds yesterday, we harvest today and tomorrow. Where we plant the seeds today, we harvest tomorrow and the day after tomorrow. We've always been ahead of the curve of growing sales and growing our R&D to really have the technological edge, the value add for our customer developed. We have done that. We'll continue to do that. That's the core of our company. We'll be focused in high conviction projects and segments, highly adjacent, as Yuri has shown. Highly adjacent also in the case of IXS, where we have an industrial base business, which has allowed us, with our competency, to step into semi. So that is our key, which we'll continue to do. And as we are a resilient, strong balance sheet and setup, we'll do that also throughout the cycles. We have been, and we will be ahead of the sales curve with our R&D. Let's look a little bit where is the specific factors which fuel our growth, and that's a second focus we as a company now need, also where we enhance efficiency and strengthen resilience. Key aspects for growth. First and foremost, it's the seeds we have planted in the past in PCT, especially in PCT, because that's where we have the longest cycle, where we continue to penetrate our existing customers with existing products, with new products, where we penetrate new customers, expand our markets, expand our reach in the markets. That's the biggest contributor to our growth. The second big block is that we have new products, new segments and services which we have been developing, which we have launched, which we are launching. And that's on the one hand Synertia, and that's on the other hand pivoting the X-ray business towards semi, CA20, what Isabella presented for the systems as well as for the related modules is a key part of that driver. And last but not least, you've heard both of them, Isabella and Andre, talk about the software and how we do that with our Dragonfly. That's another platform which is key in order to fuel that growth in new products and services. Having a look at efficiency and resilience, the key point is this is the second focus for us in order to develop our company for tomorrow. And what's the key drivers here? Number one, and Yuri touched on that as well, it is looking at the processes and becoming more efficient in what we do and how we do it. Second point is, well, how can we take advantage of our new best cost site in Penang? And we've seen we are very well on track. We have a large facility we are building there to host, on the one hand, production. So that means shifting blue-collar work to Penang and growing blue-collar work in Penang, as well as significant office space, because we want to shift more and more also white-collar work to Penang and use that as best cost site. So basically, that is the second key pillar when it comes to cost efficiency is, first, how many resources do we need? Second, how can we shift some of those resources to Penang and grow there in Penang instead of high-cost countries? Another point, operating leverage, I think that's pretty clear. When you look at our capacities, today we run plus minus one shift, sometimes a bit more, but there is a clear case for the leverage in terms of our production capacity. We are set up to bring the volume in. We are doing the work with our customers. Whenever that comes, we'll see the operating leverage coming through. Product line profitability, that's a multifold topic, but of course we are looking into our different product lines. Are there product lines which need a turnaround? Are there product lines which we might or might not want to continue, but here we're talking small stuff, not big stuff. But that's the usual type of cleansing a company should always do in its product portfolio. We'll do that diligently. All of that is needed in order to assure our growing profitability for tomorrow. Let's have a look how that converts into numbers and what that means in numbers. When you look at net sales, it's very clear. The key part is volume and mix on our products, and that is the key driver as just explained. You harvest today, you plant the seed today, you harvest today and the day after, tomorrow and the day after tomorrow. Second part is the new business, and that's mainly, not only, but mainly CA20 and Synertia. And that is the contribution we will see from our new business in a year plus minus 28, which is not where we want to be in the future, but which is an intermediate step. Because as I said, we plant the seed today, we harvest tomorrow and the day after tomorrow. Why we are really doing this, Synertia as well as CA20 goes clearly beyond what we have in here for our 228 ambition. And FX, as mentioned, as long as we talk in Swiss francs, we'll have this effect. In dollars, you wouldn't see this effect. Let's look at profitability, how that converts into numbers over here. Again, the volume and the price mix effect have the key impact, and that is the volume from our current product line as well as the modernized portfolio, the new product lines which we are bringing in, which also come in at a higher gross margin. Second important point here is that efficiency will play a different role. In any case, we have an FX issue and we have opportunities on the efficiency side. So working on that will bring us between 5 and 7 percentage points in EBITDA between today and 2028. Focus points there, on the one hand, it's really the restructuring which we have started in the non-semi business from IXS in order to enhance profitability. It's also the efficiency measures I mentioned, and it is utilizing our best cost locations in Penang and possibly elsewhere. So that's the key drivers behind our profitability improvements towards 2028. Let's look at the divisions, and this picture should be pretty familiar to everyone who has accompanied the company for a while. We have around 2/3 of our revenue from PCT, or we will have. We don't have it today, but we will have it as PCT is growing slightly at a higher rate. But when we look at profitability, we have the same picture as we've seen in the past. IXM will be plus minus within our group range, PCT being a highly differentiated, pure semi player will be clearly above that, and IXS, and I'll come to that in a second, will be slightly below the group average. ROCE, same in general, just IXM due to its capital intensity is a little bit lower here, but that I think is also a familiar picture. Let's take a little bit closer look at the divisions, what's driving the growth as well as the profitability development in the different divisions. And it is, as you will see, slightly different drivers here. PCT, as mentioned, it's the penetration and it's the market growth, as well as it is the uptick in synertia with our new product lines there. That's the growth side. On the profitability side, it's the operating leverage that is for sure the strongest driver, but it's also efficiency measures. And here in PCT, as this is the main user of our new site in Penang, that shift and pivoting towards Penang has a significant impact as well. Looking at IXM, IXM has renovated its product portfolio in the past years, so this will be kicking in the next couple of years, improving sales and also improving the margins we can have with new state-of-the-art products in the market. So that's the growth side. On the volume side, on the profitability side, it's volume on the one hand and efficiency measures. IXS, here the growth driver is the pivot to semi. It's not the industrial business, it's the pivoting to semi, as mentioned with CA20 and related products. And when we look at the profitability, it's basically two key drivers. One is that pivoting to semi, which has a different gross margin profile than an industrial business. But on the other hand, we have started to right-size the organization in the industrial part, and that is the second important driver to get our profitability in IXS to where it needs to be. IXS, I'd like to shed some more light on how we look at IXS, because if you see IXS from the outside, it's one division and it makes a loss. And that is not too transparent, and we look at it differently, and we'd like to share that view also with you. For us, IXS, we look at it as two business lines. One business line is our industrial business, and the business line is CA20 and the semi segment. So when we look at 2024, we have invested order of magnitude 10 to 15 million Swiss francs in that year just to go into the semi market. That is R&D and that is market access. Both important and both needs funds. So that is basically that part. If you take the other part of the equation, you have a 5 to 10% percentage points EBITDA business. That is not where it should be for an industrial business, but that is where it was in 2024. When we look into 2028, then for semi and CA20, this is clearly the intermediate step to go to where we really want to go, what Isabella mentioned. In 2028, we'll be at least break even. That is pretty clear. And in our industrial business, we'll be at a benchmark level for the industry, which will be for sure more than 10% EBITDA for that part of the business. So this is the way how we look at it. We look at it as two business lines, and we'll continue to share that view and a certain transparency on that with the financial community, because we understand that it's important for you to know what we're doing here, what is the investment case, and what is the industrial business. Looking briefly at cash flow, we have an operating cash flow, as you know, which funds our operations, our standard investments, our growth, which also funds mid-size investments in, for example, Penang now. It's a facility of about 80 million francs, including the equipment, which we are funding out of our operational cash flow of the years. And it's also able to fund some bolt-on acquisitions, for example, to accelerate growth in certain areas. You can develop something if you want to accelerate and can buy something in terms of development of product that can make sense. And if it's smaller acquisitions, it's well to be financed out of the operating cash flow. The stability we have enables us to operate throughout the cycle and to conduct our business throughout the cycle. We'll continue on that path. Looking at capital allocation, key driver is we will continue to invest into growth. That's R&D and market access with an R&D ratio of about 10 to 15%. But that could also be the mentioned bolt-on acquisitions, targeted M&A, for example, on the technology side. We'll maintain an adequate balance sheet for us as a technology company, so rather leverage-free, and the financial flexibility to execute on our strategy. Shareholder returns, we will pay the dividends according to our policy, and if there's other ways to return money to shareholders, and that would be the best way, we would, of course, not hesitate to do so. Some housekeeping on other financial KPIs, and let me focus here just on two. CapEx between 3 and 7%. We are low to mid in CapEx intensity in our business. When it comes to VACAPS and IXM, it's a little bit more in production. When it comes to IXS and to the matchboxes, it's rather assembly, rather low capital intensity. So maintenance CapEx is about 2%, about 3 to 7% is what we estimate throughout the next couple of years. Working capital, net working capital, we'll go to slightly below 20% as a group. And when you look at where we are today versus where we will be tomorrow, the key driver there is inventory. We still have some high inventories from the last ramp, and we have, as Yuri mentioned, changed some of the ways how we do these things to build our resilience. And that includes that we know quite well how we get our inventory improved, our inventory levels, and we'll get mostly thereby to a net working capital ratio below 20%. Let me wrap it up. What's the key driver to get to growth and to profitability? It's the growth initiatives on the one hand, but on the other hand, it's also a second focus on improving profitability, and that means looking at our cost position, looking at our cost efficiencies. It also includes looking into how to best use our best cost site in Penang, which we are finalizing in 2026, and the mentioned revisions of product portfolio and similar. Solid financials for growth, what does it mean? At first, it means that we prioritize and focus our spending in terms of R&D or CapEx on the key pillars which we need to achieve our strategy and our future growth, and that we remain, other than that, a very healthy capital structure. How will that change and transform Comet? There's a couple of things without going into details, but it starts with a fully transparent culture. It goes on to infrastructure like IT systems, look, we are a standard industrial company when it comes to execution. Why shouldn't we have a standard system? That's much cheaper and much better. And by doing that, we are able to really leverage our group size and, as Stefan mentioned in the very beginning, our fundamentals, which we have in common as a group. So that's the key takeaways. In the end, it's how do we enable Comet's transformation to growth and profitability. And with that, I'm happy to hand back to Stefan for the wrap-up.
Thank you, Christian. And let me close Comet's Capital Market Days presentations for today by trying to stitch and bring all together. So we've looked at how Comet is executing today, delivering on our plans, expanding capacity and investing in innovation, people, customer proximity, which is extremely important. The world around us is obviously, as you know, changing very fast. For us, that means our own transformation must continue with equal speed, determination, and also measured risk-taking. We are operating in an environment defined by shifting geopolitical and economic conditions, coupled with an industrial transformation that is reshaping the semiconductor landscape as well as our societies. Supply chains are being realigned, technology roadmaps are accelerating, and regionalization is becoming a defining force. These developments create both challenges and opportunities to which we need to respond proactively. That's why pushing ahead with our own transformation it's not optional, it is essential. We are strengthening our organization, modernizing our processes, and investing where we can make the greatest impact in technology leadership, customer proximity, and operational excellence. Pursuing this transformation with determination will ensure that we maintain our leadership in RF power and X-ray and continue to be a relevant and trusted partner in the semiconductor industry. Our transformation is about preparing Comet for the next phase of profitable growth. That is reflected in our updated midterm guidance. Over the past year, we've continued to strengthen the foundation of our business by improving operational resilience, expanding capacity, footprint, and sharpening our focus on the markets where we can actually lead. As a result, we're now able to update our midterm guidance to reflect both the progress we've made and the realities of today's market environment. The midterm outlook remains weighed down by a challenging business environment, marked by slower than expected adoption rates across key markets and continued currency headwinds. Persistent exchange rate volatility has pressured margins, as Christian explained before, while a more cautious spending climate is delaying customer investment decisions, tempering growth momentum in the coming quarters. Our updated guidance remains, however, ambitious, but it is grounded in solid opportunities and execution. It reflects a company that is transforming, scaling, and ready to capture growth as semiconductor demand rebounds and recovers. We see structural long-term growth in our core markets. At the same time, we're managing near-term volatility through disciplined cost control and operational agility. With our transformation fully underway, we are confident in our ability to deliver sustainable growth, stronger margins, and improved cash generation over the midterm horizon. In short, our updated guidance is not just a forecast, it is a statement of intent. Comet is positioning itself for the next cycle stronger and more focused than ever. Now, before we go into the next slide, before we go into Q&A, let me summarize why we believe Comet represents a compelling investment opportunity, not just for the near term, but especially for long-term sustainable value creation. First, Comet's foundation is built on mission-critical RF and X-ray technologies that sit at the heart of semiconductor innovation. As chips become smaller, faster, and more complex, the tools and technologies needed to manufacture and inspect become even more essential. We are uniquely positioned at the center of that evolution. Now, second, the structural growth drivers behind our business are stronger than ever. We are aligned with local and global long-term global shifts, reshaping the industry onto which we have cast our focus. Our technologies are enablers of those transformations. Third, our strength lies in focus. We hold leading positions in high-barrier, highly specialized market niches, backed by deep customer integration, and these are areas where expertise and trust actually really matter because they decide the outcome. Fourth, we are developing a scalable and resilient operating model supported by a very global footprint. This combination of operational discipline and geographic reach gives us the agility to weather market volatility and the strength to fully benefit from growth cycles. Fifth, our capital allocation remains disciplined, supported by a strong balance sheet. We invest where it matters while maintaining financial strength and accountability. And finally, we have a clear path to profitable growth and sustained value creation. This is the roadmap we are already executing. So in summary, Comet's story is one of opportunity, innovation, discipline, and execution driven by people who believe in pushing technology forward and creating lasting value. We're proud of the foundation we have inherited, but also continued to build, and even more excited about the road ahead. Now, at this point, I'd like to thank you for your attention and patience and continued trust in our journey.